I think a big part of it is the Feds are concerned we're going into a recession and they want to unwind this balance sheet.
Jump out at me. Do you think stocks overall are headed higher?
I do. I think this is a correction within a long-term bull market.
Historically high inflation, Feds tightening, war with Russia and Ukraine, possible food shortage on the horizon. Have you seen gas prices lately? Very scared consumer on top of everything else. But hey, Kelly, nothing to see here. Stocks are going higher.
Even though stocks have been whipsawed since the end of February, credit investors have bought $150 billion of new corporate bonds this month.
Bond market has been, well, a disaster. Rates up 50% in a matter of weeks. Bonds selling off all over the world, in fact.
Oh my God.
Your next guest warns this might be the worst bond market of our lifetime. The story of this hiking cycle continues to be the utter disbelief the Fed will get very aggressive, even risk a recession. Yes, they will, says Jim Bianco. And their policy is creating carnage in the bond market and eventually losses in your portfolio. Did you mean losses from a stock perspective as well?
Yes, I did.
That stocks can still have a good year. Fundstrat's Tom Lee is with us now. Welcome back. It's good to see you.
He was projecting an over 5,000 S&P next year. Mind you that this was written in November 5th of 2021.
Good to see you, Scott and crew.
Will you admit that you've been too bullish on stocks?
Yes. I'd say that our base case for this first half of this year was stocks would be treacherous.
Welcome back, investors. Today we're going to talk about what is really going on in this market. What do I see? What are my projections? I gave you guys the opportunity to vote in the community tab. Over 45% of you believe we will finish the S&P between 4,000 to 5,000. 37% of you are on Tom Lee's train here of over 5,000 S&P, and 18% believe we will finish the year below 4,000, which would probably put us into basically recession, guys, going into 2023. If we finish this year below a 4,000 S&P, you better believe we're talking about recession going into 2023. All right, guys, so what am I going to do today is basically just kind of go over the charts really quick, give you guys what my 2 cents are. If you are new to the channel, you know what to do. First thing is first, guys, we've basically been way ahead of this move. Tom Lee could absolutely subscribe to the channel if he wants. Tom, it costs you nothing. I would have saved you a ton of money. Probably saved your clients a ton of money. I'll leave my info down below. Tom, feel free to reach out if you need anything and would love to help. Tom Lee's the man. I'm just joking. Okay, so please, guys, take whatever I say with a grain of salt here. All right. So I'm sure the comments are going to be flooding with ridiculous comments here. All right, guys. So if I were to project where the S&P 500 is going to go by the end of this year, I think it's going to be a very, very volatile year overall, guys. Over the next 24 to 36 months, I believe it's a stock picker's market. And I think over the next 18 to 24 months, probably closer to about 18 months at this point, we are going to see some crazy stuff that we've never seen before. For a few reasons. Obviously, inflation is out of control. That's one thing. Secondly, we've never had a country and a Fed taking on so much debt and liability here, right? So we know that the Feds have to unload about $9 trillion. They're going to do a wildfire sale of $95 billion a month of asset sales. So yeah, that's going to be interesting to see how that plays out. So with all that being said, it definitely is unprecedented times. I would hesitate to get too excited about what could come. While we do have a strong job market and while we do have a pretty well capitalized consumer, the consumer fear is extremely high, guys, okay? So consumer fear is extremely high. That means they're not going to spend money. We're going to see probably retail take the biggest hit. So we have a slowing down economy. It's clear as day. And what are they doing? They're going to be dumping trillions of dollars into that slowing down economy while raising rates, okay? On April 12th, 2022, 8:30 a.m., we are going to get the CPI, guys. Really going to see where inflation stands, okay? Very important number that's going to come out here. Now, I've heard some crazy numbers. I don't know what to really put my finger on, and I don't attempt to even think about. So guys, I'm going to give you what I think is a likely outcome here, okay? First and foremost, I have said this before, guys, true capitulation has yet to happen in my opinion, all right? Companies like Amazon, Alphabet, Microsoft, and Apple have yet to really participate in the capitulation process here. Well, most of the stocks have. You want to see the majority of the market head more towards a capitulation, and you want the following stocks to be your leaders, the ones that are weighing in on the S&P 500. That's usually a healthy pullback. We have yet to really see that come out of those companies. And when I think we see that come is when I think we finally see a bottom in the market. That's why I've really been hesitant to really call a bottom here, okay? We've shot pretty much in a straight line, guys, okay? This is what it looks like to be in an accommodating market, and stimulus is coming and interest rates are low and the job market's starting to creep up to a point, and you start reaching this point of euphoria where now almost anything you can think of and everything you can think of, you can sell for something, whether that's NFTs, crypto. I can make a crypto up right now, and if I market it well enough, somebody will buy it, right? And that's how you know you're in a stage of euphoria. That's a very scary stage, guys. You know, that reminds me of 2001 when the dot-com bubble happened, and you have all these basic skeleton companies that went public that people were buying up that really didn't even have a business model behind them. Broke a uptrend in the market, clear as day. There's no way to look at it. You guys can see that black line that we followed all the way up has been broken, and it's been broken hard here, okay? So one of the levels I really want you guys to put an eye on, and I'm going to actually make it black here so you can see it a little bit better on this chart here. Now, I'm not concerned for the near future. I'm concerned for about the next 8 to 12 months here is where I think we're going to really see if we're going to go into a recession, okay? That's just my opinion, guys. You know, right now, everything seems good on the outside, but what you guys don't understand is the bond market is absolutely crazy right now, okay? That is a huge market you want to keep an eye on. If the bond market's signaling stuff, you want to pay attention. The bond market is much more ahead, much more accurate than the stock market, okay? Stock market can be absolutely manipulated. When you see bonds moving viciously as they have been, very concerning. You better keep your ears up. Somebody can manipulate a stock price all day long if you got enough money, right? But eventually the fundamentals will catch up, and it will be the true value will come through that stock. When the bond market's signaling the way it's signaling, there's something fundamentally breaking down here, okay? You know, I look at Warren Buffett's acquisition recently of HP, right? Very defensive play when you think about it, right? We have a reopening of the economy. People have to get back in the office. People have to go back to school, go back to work. HP is going to be needed here. It's like, because in order for us to communicate, in order for us to work, we have to have the appropriate tools, right? So I look at HP, it's not a sexy name, but what are they doing? They're buying back stock, they pay a dividend, the PE ratio is fairly low, and it's something we're going to need as we start expanding back out to an opening economy. So for me, guys, the acquisition of HP made a lot of sense, okay? And when you think about how much cash Warren Buffett's sitting on, I think he has some concerns as well. It is 450 black line that I've got underwritten here, okay? Look at how the market broke below it, came back up, squeezed above it, came back down, broke below it once again, and then held down here, consolidated a little bit, and made that nice move up when the Feds raised 25 basis points. Market was pricing in probably 50, Feds raised 25. But where the divergence is, guys, let me shrink myself down so you can see this. Volume wasn't strong on this move, guys. Okay, volume is coming down, it's shrinking here, okay? What does that tell me? That tells me there's not a lot of confidence in this buying. That tells me that probably retail investors weren't participating in this. But what we have coming up now, guys, is we got CPI coming up, okay? We got CPI and we got an options expiration date. I think this could be a very, very scary week here, guys. Very scary week, all right? We have a 9 count formulating. We're below that 450 mark. Now, I think if CPI comes out, we might get a nice pop above that 450 mark. As I stated before, the moves are usually pretty drastic once you break below it or break above it, okay? And right now, I think we might have an opportunity to break above it. And we also have a sell signal with a 9 count formulating. So I do think we're probably going to, more likely than not, I think the move is going to be hitting the 50-day moving average at this point, okay? Depending on CPI, that might give us a short-term move here. But overall, I think the move is going to be that 50-day, hitting that 50-day moving average, finding some support around there. Unless something catastrophic happens, then our next leg down will be coming sooner than later. In my opinion, guys, what I think is going to happen this year, by this summer, guys, I think we put a new bottom in on this market. About a little over 8% removed from these lows, okay? Which means that a 9% move would take out the lows. Here's what makes this so interesting. This setup reminds me of 2018 when the Feds started tightening in December of 2018, and we had a intraday move, guys, in the S&P 500 down 9%, okay? If that happens now, it's like the playbook here, guys, okay? We would take out the lows, we would probably get true capitulation. And one of the levels I'm really keeping an eye on, guys, on the SPY is, I think we need to break below 410. Unfortunately, there's a gap that needs to be filled, I think, right around 3950 or 4,000 on the total S&P 500. On the SPY, I believe it's right around 400, okay? So there's a gap that I've been looking at there that looks like it might need to be filled here. And so I've been keeping that in the back of my mind as well, along with what's going on. So fundamentally, we have some issues here. We have some softness in the economy. Technically, there's some things that need to happen. We need to have capitulation with all parties. We need to have true capitulation with all parties being participating in this capitulation. And we also have a technical possible gap fill that needs to take place on the SPY or S&P 500. From that point, I think we consolidate and can start talk about making the move up. And I think we close out the year right around 4,600 on the S&P, maybe 4,700 on the S&P. So I am in the camp of 4,000, between 4,000 to 5,000 if I were to vote. So my vote would be between 4,500 to 4,900. I think we'll be below 5,000. I am not a Phillies fan, by the way. My girlfriend's a Phillies fan. I am a Boston Red Sox fan, and I am a Patriots fan. But now that Tom's in Tampa and I live in Tampa, it's just natural that I'm a Tampa fan. So as always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you next time, investors. Peace.